You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Welcome back, everyone. Welcome back to another episode. Hamish, how are you going, my friend?
I'm doing well. Yeah, not too bad.
It's
Pretty
good.
uneventful week in the markets and in my
I
personal
know,
life.
right?
So.
All right, and that's the podcast for today, guys. Thank you very much for tuning in, as always.
Hang on, let's see what
Yeah,
happens.
no,
Nothing. All right, cool.
It's actually, this is probably the quietest week we've had in a fair while, but
Although-
I don't know, we still plucked some interesting stories.
Yeah, although there are some interesting stories. I've got an interesting one on Bed Bath & Beyond, which has kind of happened over the last week and this week. So it's a bit of a crazy roller coaster ride for the stock, if anyone hasn't been watching the stock, which I wasn't really watching it, but I've become aware of what's happening with Bed Bath & Beyond. So that'll be interesting. So there's some
true.
interesting stories, but nothing kind of broadly happened. Like we haven't
We're
got...
just a little bit too early for inflation, aren't we?
Yeah. That'll be out by the time we're doing this. So
We'll talk about it next week.
Yeah, we'll talk about it next week. But yeah. What else have we got to talk about today?
Well, I'm talking about one that affects some stocks, the US airlines. There was a big systems failure by the FAA. So we'll talk about that. Binance, our favorite cryptocurrency platform, sponsored. No. They're going on a hiring spree, which is kind of interesting.
Wow.
'Cause
Okay.
You wouldn't pick it, right? You wouldn't pick that.
They're back in action.
And I found this story, which probably sounds extremely boring. It's about property values in Sweden.
Sweden. Are you
See, we're
thinking-
scraping the bottom of the barrel this week, guys.
Are you thinking
No,
of
but I
moving
thought
to
it was
Sweden?
quite,
Are you? You're looking at
yeah,
properties in
mate.
Sweden.
Yeah. I've been on realestate.com. Sweden. I don't know what Sweden suffix is, but anyway, I thought it reminded me of kind of the similar situation we've got over in Australia. So we'll talk about that. Anyway,
Interesting.
what else are you talking about? Box office. You like
Yeah,
talking
we'll
about box office?
talk about box office. Yeah, I'm a little bit of a movie head, so I always like to take a look at what's going on with media companies, and we now have not only the US but also global box office results for the biggest hits, and I can give some interesting stats on which companies dominated the top of the list, which particular movies dominated, and also how the box office is kind of trending relative to last year as well as pre-pandemic. Have they kind of gotten back to the pre-pandemic levels where everyone was kind of enjoying going out to the cinema?
Yeah. So we'll see how we go. We'll get through that stuff. It's just one of those weeks where just not a lot's been going on. So that's okay because we do have quite a few Q&A questions. Is
Yes.
that what you're going to say?
No, I wasn't going to say that. I was going to also say that although earnings season is upon us, well, it's kind of basically started, but there hasn't been kind of too many interesting ones we've seen so far. But over the next few weeks, we'll probably cover a lot of earnings, and we'll try and pick out some companies that are going through some kind of unique circumstance, something that is interesting to discuss. But if you guys see any that you know, maybe a stock goes up a bunch after an earnings, something crazy happens, like, you know, a CEO storms out of an earnings call or something crazy like that, please let us know. You can always leave that as a comment, and we'll be happy to cover it, because we try and like find as many interesting ones as we can. But there's a lot of companies, even just out of like the US. There's so many companies reporting off the S&P. So if you find something, let us know, and we'll be able to cover it.
Did you ever watch The IT Crowd?
Yes, great series. I watched all of it. Yeah,
the whole your line about walking out of an earnings call reminds me of the guy that owns the company. You remember when the girl
tax?
comes in? And
Oh,
she's like,
no.
yeah, she's like, the police are here. They've found some irregularities in the pension fund. He just walks over to the window. He opens the window and he just jumps out. And that's it. That's literally how the actor leaves the show, is his character just jumps out the window.
That's so funny. I haven't thought about that show in so long, but it is very
It's
funny.
such a funny show. It's so funny.
Yeah.
Irregularities in the pension fund. Anyway, geez, that's a bit of a morbid joke, but anyway.
Oh boy.
All right, team. Let's get into it, eh? Hamish.
Yeah.
Who are we sponsored by again? I've forgotten.
Today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker, or you can do it manually by downloading your trades from your broker using Excel or entering them in one by one, however you want to do it. And once you do that, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans, it will do those calculations for you. Currency gains, if you're buying shares internationally or you hold foreign currencies. And then you can also use it for when it comes to tax time. So Sharesight generates up to 12 different reports that can be used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So use that link. You can sign up to a free account where you can track up to 10 holdings, so stocks, ETFs, that kind of thing, completely for free for as long as you want. Or you can also use that link to sign up to a premium account for more reporting and benchmarking your account against indexes and that sort of thing. And if you do that, you'll get 4 months off a yearly subscription if you sign up to an annual plan. So go check it out if you're interested. And as always, thanks to everyone who is signing up to Sharesight and using our link when doing so and is supporting the podcast.
Yeah, for sure. All right. Where do you, I want to get your take on inflation. So inflation data comes out soon.
Yes.
We've had, what is it at the moment? I want to get your prediction. What's it going to be? What's it going to come in at?
Yeah, that's actually kind of funny. I mean, I have no idea. I think it's going to be, here, I'll give a bit of background and then I'll give you a projection. But the consensus, the market consensus at the moment is that it's going to come in at 6.5%. So that's kind of where the market thinks it's going to be. I don't really know.
It's 7.1 at the moment.
It's 7.1 and expected to go down to 6.5%. It's actually funny. I stumbled upon a CNBC video before where this portfolio manager was being interviewed as normal on CNBC, just giving their projections. And she goes, this is exactly what she said. She was like, well, we've seen the rate decline from the last report from 8.3 to 7.1. So I think it's going to come in at around 6.6. That's word for word her quote for why inflation is going to be 6.6%. Not that she's just looked at the consensus of 6.5 and then picked something relatively close so that she's probably correct. But anyway, who knows what inflation is going to be. I don't even know how they come up with these average consensus figures. They're often sometimes they're close, sometimes they're way off. So who knows? But I would not, I guess, look, following this portfolio manager's flawless logic, it's been declining for the past, I think, 6 months or so in a row, 5 months or so in a row. So that's the trend. And if you're going to force me to make a prediction that is impossible to predict, then sure, the trend will continue and it'll be in the 6% range.
Right. Okay.
I don't know. Do you have a prediction?
I have absolutely no idea. But I mean, if I draw a line of best fit, then you're probably right.
Yeah.
In the sixes.
That's the thing. That strategy works until it doesn't.
Until it doesn't. It's until we start going the other way. Yeah, exactly right. And then we'll start drawing a new line of best fit until that doesn't work. Yeah. No, it's so, and that's part of the joke. That's kind of why I say things like, hey, make a prediction, because we just know that it's just dumb to make a prediction. So it just makes it funny for us to force ourselves to try and do something like that.
So I think the figure comes out tomorrow for us. So it will be out by the time you see this podcast, and we'll be able to discuss it next week, along with I think what the Fed will be doing as well. And probably I think we'll also get Australian numbers maybe next week or the week after, and then all the others as well. So we can kind of see how the global inflation is trending over the next couple of weeks.
Okay. Cool. Nice. All right. Well, let's leave that there because we'll talk about it more next week. What should we talk? Oh, I'll talk about this FAA systems failure. What the heck is going on with that?
I haven't seen any of this, so break it down for me.
No, I've only saw it. The only the thing that got me switched onto it, I just follow Marquez Brownlee on Instagram, MKBHD. And I was just watching his stories, and he was talking about how he's been like grounded, and then they took off and they had to fly back to where they came from, and just a whole bunch of different delays. But this sounds absolutely ridiculous. And I'll say it up top. The reason it sounds ridiculous is I can't believe there's not some level of redundancy in this system because anyway. That's my take, and now I'll read you what actually happened. Thousands of flights. So the headline article: FAA systems failure grounds planes across the US. Thousands of flights across the US. So we're not talking a small, 5-10 flights. Like thousands of flights across the United States were delayed on Wednesday after a Federal Aviation Administration pilot alert system failed overnight, prompting a nationwide halt to departures.
Wow.
The FAA lifted the ground stop on departing flights around 9 a.m. ET as it worked to restore the notice to air missions system, which is responsible for sending messages to pilots, such as those about closed runways, hazards, and other information. The FAA's outage was the second major air travel disruption in less than a month and drew bipartisan criticism. Winter storms derailed holiday travel late in December, prompting widespread cancellations and a crisis at Southwest Airlines after it buckled from all the schedule changes. The NOTAM system failed at 3:28 p.m. on Tuesday, according to an FAA notice. The FAA later rebooted the system altogether, and the agency on Wednesday morning ordered a ground stop, which holds planes scheduled to depart.
Right.
Transportation Secretary Pete Buttigieg said he has directed an after-action process to determine the root causes and recommended next steps.
So is this the system that connects pilots to information on the ground? That's what failed overnight. Like
honestly, I'm not
100%
100% sure at exactly what that is, what that system does.
System. Closed runways, hazards, and other information. Even if it's not the entire system, that's pretty important information. That's crazy.
Yeah. But the thing that, so it says here, more than 9,500 US flights were delayed as of 4:45 p.m. ET on Wednesday, according to flight tracker called FlightAware. Residual delays from the ground stop worsened throughout the day due to backups. More than 1,300 US flights were cancelled on Wednesday. There were more than 23,000 flights scheduled to, from, and within the US, according to aviation data firm Cirium. Yeah. Wow. But that's the thing. This is what's getting me. This is a pretty damn important system.
Yeah.
Right? It's gone down and it's literally kept planes on the ground all across the United States. How is there not redundancy built into this system? If it fails, another one kicks in or something like that. The power goes out and the emergency generator starts, that kind of thing. How is there not some level of redundancy?
Yeah.
I don't know.
Yeah, that is kind of crazy. Yeah, there was a similar thing, or not quite similar, but there was a hack among, I think it was like the emergency call center in Australia a little while ago. There was like a data breach and they had to shut the whole system down just because there was a data breach and they wanted to protect against that. But there was no way that they could continue using the system while protecting against the data. It seemed just like an obvious thing that they should have in place. So yeah, I don't know. It's always very strange when these like large failures, like software failures or whatever, happen.
It's flippin' bonkers. I mean, more than 9,500 US flights were delayed. It's like, what?
That's a lot of flights as well. I didn't even know they did that many flights.
And you think like how many people, like how many holidays were just disrupted, or how many funerals were missed, or how many business meetings have to be rescheduled. It's like dunk, 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 like the flow-on effects to something like a major disruption in airlines. It's just like just all the way down.
Everything's got to be pushed back. Everything's got to get scheduled back. So if you're pushing a meeting back a day, then that pushes everything back a day. Yeah, it would be interesting to see a visualization of just the ripple effect that has through the economy, through people's personal lives. It's kind of like the butterfly effect of things, like how you do something and you don't really know. You're like a node in a network. I think some people refer to like your impact on the world. It's like you don't know all the little ripples that happen after you do things. Very interesting.
It's like I can't remember, is it in a movie or something? They go back in time and they like to the dinosaur age and somebody just steps on the grass or something like that. And then they come back to the present and like the English language, like A's are E's and E's are A's or something like that. And they're like, wait, what? I can't remember. There's something like that. I might be remembering that wrong, but something like that. It's exactly that. You change one thing and then the ripple effects are just insane. It's like one superpower that I kind of thought, that I thought up, that I think would be really, really funny to have. It's really obscure, but it's the ability to just know any fact that you want to know. Like, you just ask the universe a question and you just get the right answer in your head every time. Yeah, so it'd be so interesting. Like, these are like unknowable things, but it's like, how many business meetings were missed because of this? How many, it'd be so interesting to know. They're totally unknowable facts, but yeah, it's so bizarre. Anyway, back on track. The White House said Transportation Secretary Pete Buttigieg debriefed President Joe Biden on the outage. Quote, there is no evidence of a cyber attack at this point, but the president directed the Department of Transportation to conduct a full investigation into the causes. White House Secretary Karine Jean-Pierre said in a tweet. Later Wednesday, Canada's Air Navigation Agency said its similar notification system experienced a brief outage, but said no flights were delayed as a result. So that's a little bit weird.
Yeah.
That system was restored by approximately 2:15 p.m. ET. Anything else to add? Wednesday's FAA issue added to the concern from Washington from both Republicans and Democrats, particularly about technology that the complex U.S. air system, the world's busiest, relies on. As the committee prepares for FAA reauthorization legislation, we will be looking into what caused this outage and how redundancy plays a role in preventing future outages. Senator Maria Cantwell, chair of the Senate Commerce Committee, said in a statement on Wednesday. That was my point. That's really my point. That's why I wanted to put that quote in, because exactly right. Surely you got to have some level of redundancy here. It says here, another quote from her was, the public needs a resilient air transport system. I think that is a fair quote. I don't know who you are, Maria, but
it does.
I think you might be onto something.
It does make you wonder if there is a large, another, hopefully not, but if there is another world war that occurs, how much cyber attacks and cyber warfare will play a role in battles between countries. Because, I mean, even just, obviously this probably isn't what's happening in this circumstance, but it's just interesting to see that, there is this system that is so vital to a massive part of the US economy, and it's seen that they don't even know what caused it to go down. So like there could be something that, prevents this piece of software from functioning, and then that has, massive ripple effects. It does.
I do think,
does make you wonder.
It is interesting. I'm no expert, but I tend to believe that war in the future will not be military based.
No,
I just think that a military based war is just not, it's costly and it doesn't really achieve much. Like, just kill your enemy, destroy their cities. I definitely think you can inflict much more pain by having like the 1,000 best hackers in the world and doing stuff like this, like grounding all of like hit them economically kind of thing, like make it I think most war will be economic in the future. I don't know.
I mean, it's definitely shifted that way over time. It's when, obviously, with what's going on in the Ukraine, it's obviously not 100% there. But even with that war, it's a lot more missile action, and anti-AA versus, pure boots on the ground. So it has certainly shifted, at least scaled back to more air warfare, and then as you said, more economic sanctions and that kind of thing.
And it's like, it's so interesting. Like, that's obviously like a proper war, but even things like this, like these, I don't know what to call it, like a soft war between like China and the US with all those tariffs back and forth, the economic tariff, the import tariffs and stuff like that. Like, it's very interesting, but I definitely think as economies get bigger and bigger, then it'll just be, they'll try and target certain sections of economies, but I have no idea. That's just my my washed opinion, Hamish Hodder.
Washed, yeah.
My absolutely washed opinion.
Well,
if we have any like military strategists that listen to the podcast, please let us know how wrong we are.
Please stop doing your vitally important job and comment on our podcast.
Tell us how washed we are. All right, what are you going to talk about?
Let's talk about Bed Bath & Beyond, because this is one of those companies that was kind of It's been swept up in the whole meme stock mania that happened in 2021, which seems like such a long time ago now. With GameStop and AMC, so it was one of those companies with a high short interest that went through a short, a bit of a short squeeze. Wall Street Bets, Reddit, that kind of thing. But it's back in the news, and it's kind of reaching a point of contention. So I'll go through what happened last week, and then some updates that happened just last night that I just saw. So. Last week, essentially, the company came out and warned investors that they may have to file for bankruptcy. So they've been burning cash hand over fist, and they're now coming out last week they came out and said, "Hey, yeah, we're just preparing you for the fact that we may run out of money." They said the quote was, "We're running out of money and considering bankruptcy," and they cited worse than expected sales. Warning that in the coming months, it will likely not have cash to cover expenses such as lease agreements or payments to suppliers. So in the coming months doesn't sound too far away. That's, you're talking about they've got like a 60-day window to start making some more money. And essentially last week, that caused a 30% one-day drop in the stock. So massive collapse in the stock. And that's also come after it had already been collapsing for a while. So it kind of had just accelerated the decline. They also said that they won't be able to refinance some debts that they just a month ago said that they were going to be able to refinance. So it's what a lot of these businesses kind of rely on is they have some debt, and as the maturity date comes, they just hope that they can find another bank or another bunch of investors to get a bunch more debt and just refinance, basically pay off the old debt. Although as the company gets more and more distressed, it becomes more difficult for them to do so. They have to charge higher interest rates, and then it becomes even impossible for them to get new debt because who's going to give money to a company that's 60 days away from bankruptcy? It becomes pretty difficult.
That's crazy. Is it? I'm guessing. I really don't know much about Bed Bath & Beyond, but I imagine it's just sales are down just because people just don't have any money to buy stuff.
Yeah,
or they're just lower discretionary spending.
Yeah. So it's probably been a little bit. Definitely, they're a brick and mortar, retailer, consumer retailer. So they've obviously been impacted by, and they have some online sales, but not as much as other businesses. So through the pandemic, they were hit a lot harder than some other businesses that were in a more balanced position, or something like Amazon where it was all online. So they were in the perfect position to kind of mop up all of that consumer revenue from companies that had mostly brick and mortar stores. But the business, it's not just a COVID story. The business has been struggling for a little while now. Their sales actually peaked in 2018. So they peaked at 12.3 billion. And then just in the last 12 months, it's kind of been consistently trending down. The last 12 months has been 6.2 billion. So that's like a 50% decline since 2018. And the reason why they're in trouble now, even though they're still making 6 billion, is because even before, when they were producing their peak revenue, their business was not a very good business. They only had a 3.4% profit margin when they were making 12 billion. So with a 50% fall in revenue, they're now at a negative 20% profit margin. So they've gone from 12 billion in sales and making a few hundred million in profit to 6 billion in sales and burning $1 billion a year is what their burn rate is at the moment. And at the moment, sorry.
I was just going to say, if that's not like a reminder to really critically analyze a business model before you enter into an investment, then I don't know what is.
Yeah, it's
and it's just like software as a service, like brick and mortar retailer. You know? Like
and
margins 3%, 30%. Anyway, sorry.
No, and to be fair on Bed Bath & Beyond, before Amazon came through and basically destroyed the brick and mortar retail space, they were growing pretty consistently over time. But it is just, the products that they sell are not unique. They tried to do this push into home brand Bed Bath & Beyond branded products and away from national branded products, and that didn't work. They tried that over the last couple of years, but really they're selling consumer products that are available cheaper on Amazon, faster on Amazon, and a bunch of other places. Because Amazon is far more efficient and they don't have to run these physical, stores. So it's just a business that's suffering from a massive shift in at least that part of the retail industry. So it's just unfortunate. But the company has, so they couldn't refinance. They have $1.2 billion of debt in total that's due partly in 2024, partly in 2034, and then partly in 2044. But it's not actually the bulk of that debt that is coming due in the next couple of months. That's the problem. The problem is that they can't get new debt. They don't have any money and they're burning it, as I said, at about $1 billion a year. And I just checked as of the last quarter, they have 150 million in the bank in cash. So they have 150 million. They're burning $1 billion a year. So it doesn't take much maths to work out that they're not going to make it to the next quarter if they keep this burn rate up, which is exactly what the management team said. They said the next couple of months.
At least they're honest.
Yeah, well, they're being honest now. I mean, it was like a month ago. A month ago, they said they were going to be able to refinance.
They said it was fine.
They've really waited. And I mean, look, obviously, any objective person could have seen the business was in trouble for quite a while. But yeah, the management team definitely waited to the last minute to be like, yeah, we're going to file for bankruptcy.
I take it back.
Well, it is kind of tough because they want to be positive as possible so that they could potentially sell and issue shares to raise capital because they're a business that needs capital. They're burning cash, so they need debt. So they need the stock price to be high. They need to be able to get debt. They need to be able to issue stock. So they kind of have to be positive in a way. It's
desperate times.
Yeah, it's kind of the same as like a new company that's not profitable. The management team's always going to talk up about how they're going to grow at 30% per year or whatever it is because they're not profitable and they want to keep raising capital to fuel that growth. Yeah. So it's kind of the similar. It's kind of like the same thing. You get a dishonest management team that's trying to sell the stock rather than be honest about the underlying business.
Yep. Even still, like, I know he'd never need to do this, but like Warren Buffett, it just shows you, like, when you think about that kind of scenario, like Warren Buffett's the name that springs to mind, where it's like he would never do that. Like that would never ever happen. And it does show you the importance of really getting comfortable with the management team and knowing who's running the ship, so that you know that whether you can trust them or not with what they say.
Yeah. Exactly right. Okay, so that was last week. So the stock was down 30%.
That was last week. Okay.
That was actually the story
this week.
I was going to give for today, and then I checked the stock last night, and the stock is up. Do you want to have a guess? If you haven't looked, do you know? How much?
No, I just saw it.
Okay, it's up 70%. It went up 70% during the day, and then it went up another 20% after hours. So in total, in the last 5 days, the stock is up 166%. So throw all of that stuff I just said about, bankruptcy and burning cash. This is clearly the greatest stock of all time. We should all be investing in.
Forget hometown, everyone.
Yeah, this is the new one. No, so that took me by surprise. You don't see that every day. 70%.
No, that's crazy. Did anything happen?
Kind of, and not really, which is kind of funny. But also just to keep in mind. The stock had fallen 60% this month, so the 166% rise just about gets it in line with where it was at the start of the month. So it's
my gosh.
So it is a big increase, but it's kind of, as I said, it's been a roller coaster ride for this company, or for the stock, I should say. So a couple of things happened this week. First, on Tuesday, which was not last night, but a couple of days ago for us recording this, they reported their quarterly earnings. So that was kind of one event that happened during the week. They reported a loss for the quarter of $393 million, which is an insane amount. So, and for the last 9 months, they're now at $1.1 billion in losses. So the last 12 months was $1 billion, and now as of this new quarter, we're at $1.1 billion in 9 months. So they're not only losing a lot of money, it's accelerating. It's going very, very quickly. The CEO, this is pretty funny. I kind of made a joke to this just before, but the CEO did a 10-minute earnings call where she just repeated 10 minutes, so it's nothing. Just repeated the press release and then declined to answer any questions. So,
oh my God.
I think before I said, the CEO runs out of the conference call. This is one of them. So
that's it. That is the real life example of a CEO running out of the earnings call. 10 minutes.
Yeah. And look, I mean,
no questions. Honestly, if you had given me none of this information that we've just been speaking about, and you just said, "Do you see what happened at Bed Bath & Beyond's earnings call?" Yeah, the CEO repeated what she'd said in a press conference. The earnings call went for 10 minutes and she declined to answer analyst questions. I would immediately be like, that business is done.
Yeah.
Or just like that something is seriously wrong.
Yeah.
Just with that information.
Yeah,
because that is just so unusual.
I was kind of disappointed because whenever there's a company going through a disaster, it's always fun to listen to the earnings call because the questions are so obnoxious.
You got to face the music. Yeah,
like they always just get slammed by.
Yeah,
and look, I mean, it doesn't really. Yeah, I mean, the questions are going to be what it is, but it's always fun to kind of. Yeah. At least I find it fun to listen to like a CEO kind of get grilled on tough questions, and we didn't get it. But the
CEO is the manager for the shareholders. Yeah. That's their role.
Yeah.
They work to benefit shareholders.
Yes.
So they should, I think they should always stand up and talk to the shareholders, no matter what.
Yeah.
So this is just I think this is quite cowardly, to be honest, if you don't even stand up and talk to the shareholders. I mean, that's what the earnings call is for. It's for the shareholders.
Yeah.
It's for you to say what's going on. It's a quarterly update to say what's going on with the business, for the shareholders to get more context, and then for major shareholders to be able to ask questions, or not even just major, just any shareholders to ask questions. And you as the CEO, as the manager, you need to answer. Honestly, you need to inform your shareholders what's going on.
Yeah.
So that seems very cowardly, to be honest.
Yeah. That's what happened. And but interestingly, the stock was flat on the news. So the expectations had already been kind of brought in line from last week when they said that they were going to go bankrupt and the stock dropped 30%. But it wasn't. So it was the next day where the CEO made another announcement. The CEO said, we're going to do further layoffs of staff to cut costs. And that's the day that the stock went up 70% and then another 20%. So it was kind of very strange to see, nothing happened on earnings, but then she announces that they're laying off staff and the stock goes up 70%, which is kind of weird. It also seems to have been a part of a broader meme stock rally. AMC was up 20%. And GameStop was up 7%. So it was kind of all of these stocks kind of rose together. And I would imagine there's some push for retail investors to potentially try and force a short squeeze in Bed Bath & Beyond, which now has, I think it was a 43% short interest. So pretty high short interest. Although it's a high short interest that in this case is fairly reasonably justified given a bankruptcy seems like it's more than likely at this point for the company. Mm-hmm. So, it'll be interesting to see what happens. But, there's been no shortage of controversy for Bed Bath & Beyond. I think there was a day earlier in the year where it went up like 200% or something. there was a crazy... If you look at... everyone can go look at Bed Bath & Beyond's stock chart. And it's just ridiculous. Yeah, what did it do? It did like 300% in a week. During August.
Whoa, yeah, it did. 275. Yeah.
So it's it's been a
that was crazy. August last year.
Yeah.
That's pretty funny.
So there you go. That's Bed Bath & Beyond.
Bonkers. That is absolutely flipping bonkers. All right, what should we talk about next?
I don't know.
Let's talk about this Sweden property value thing, because I thought this was kind of interesting, because it kind of reminded me of Australia a little bit.
Yeah, okay.
It says here, it's not that exciting. In fact, you can probably imagine everything I'm going to say when I just say property prices in Sweden are tumbling. You can probably guess why that's happening and and everything associated with it. It's not like
I'm excited. I'm excited. Let's hear. All right?
Okay. It's the most groundbreaking story you'll ever see. Sweden's property prices are facing a serious drop as the country's former central bank governor warns of lofty household debt levels. House prices in Sweden have risen fairly reliably over the past decade. This has been buoyed by ultra-low interest rates in a system where around half of people's mortgages are financed with variable rates, and many of the rest are on short-term fixed rates. So
it does sound very familiar to Australia.
Yeah, it does sound familiar. But now property prices are tumbling, and this downturn is not surprising given the dysfunctional nature of the market, according to Stefan Ingves, who headed Sweden's Riksbank from 2006 to 2022. Quote, "I've persistently, time and time again, said the debt level in the household sector is just way, way too high, and there will be a day of reckoning, and eventually rates will go up, and now rates have gone up." That was Ingves talking to CNBC's Squawk Box Europe. What you see happening now is almost exactly what you would expect to see happening. And that is that households have to pay more and the interest rate sensitivity is much higher. So they're more sensitive to changes in interest rates, which is kind of what we've been talking about with Australia as well.
Yeah.
During the COVID-19 pandemic, house prices rose across Europe. Sweden was no exception. Demand for property skyrocketed as working from home became a preference for domestic and a preference for domestic vacations prompted people to upsize their spaces. On average, house prices were up as much as 30% compared to pre-pandemic levels of January 2020, according to Nordea Bank, as the Riksbank started purchasing mortgage bonds, trying to bring rates down and adding fire to an already hot housing market. But now prices are falling. Quote, "As of November, we are seeing prices nationally in Sweden fall 13% from the peak in February. That's the largest downturn on the housing market since we had a big economic crisis in the 90s. That was Gustav Helgesen, an analyst at Nordea. And as you might expect, in 2022, Sweden's central bank undertook an aggressive interest rate hiking cycle that ricocheted through the property market. In February, the Riksbank signalled its policy rate would remain unchanged at 0, but eventually they, raised 0.25%, then to 0.75%. And where are they now? A further policy rate increase is anticipated for February, with the benchmark widely speculated to hit 3%. So they're not even that high.
Their rates are at 3%. Not even that high. Wow.
Well, expected to get to 3% after another increase in February.
Wow. Yeah, that's
I think they're currently at 2.5%. 2.5% in November.
Yeah. Okay. Wow.
So, well, interestingly though, I was looking there pre-pandemic. They had, say, house prices kind of level, and then through the pandemic, house prices went up a lot, and now they've just fallen back to pre-pandemic levels. But
yeah,
I thought this was just really interesting because as I was reading this, yeah, sure, it's Sweden, and chances are most of us that listen to this podcast don't live in Sweden. Maybe a few of you do. Shout out in the comments, if you live in Sweden. But I thought this is interesting because it kind of highlights we have the same thing in Australia where we're quite sensitive to interest rates with we don't have the long fixed interest loans like they have in the States. We have a lot of variable rate debt. We have very high household debt or mortgage debt. We have sensitivity to interest rates through short-term fixed and a lot of variable rate loans. So interesting seeing that house prices coming down due to just a rise in the interest rate from 0.25 to 3% in a year is enough to really start to significantly impact their property market.
Yeah.
So it's making me Yeah, it's making me Hamish.
It is interesting. Yeah, while you were just reading that, I was trying to find how much Australian house prices had fallen just to get a comparison, and I think I found it. So by the end of 2022, national home price index was down 2.3%. So that's for all of Australia. But if you look at Sydney, for example, Sydney was down 10%. Sydney was, what did you say? Sweden was 13%?
13.
Yeah, so Sydney's kind of in the range of what Sweden has kind of seen. Melbourne was down 5%. But then you have, Adelaide was up 14%. So it's clearly,
there you go.
It clearly depends on where you live in Australia. There's
City by
different
city.
things going on. Yeah, Sydney and Melbourne's hot property markets, it makes sense to see them fall the most because they've had the biggest increase, same as Sweden, through, the pandemic, interest rates hitting rock bottom, and people were able to pick up these very low variable short-term fixed rates very cheaply, 2.2%, 2.5%. And now we're kind of seeing a little bit of that roll over, but Yeah, it will definitely be at it. We can never really. A lot of people will try and read into how much household debt and interest rates going up this much. Therefore, this many people will sell their homes. That's not something we're kind of competent in doing, and I haven't really seen any data that I feel super confident in. But we'll kind of have to see how it plays out. But a lot of I think the housing stuff will, in Australia at least, will be over the next year or two because. There's still those 3-4 year fixed rates that have yet to roll over. We've seen the 2-year fixed rates roll over from 2020. But there's a lot of 2 years from 2021. 2021 was, I think, bigger than 2020 for purchases. So there's a lot in 2021 that will roll over next year. And then there's the 2, 3, 4 year fixed rates that obviously still have a couple of years to go. So, it will be interesting to see, what that looks like and, where the drop in prices happens because, it's not going to be equal across the board.
Yep. But it's also interesting, the last point I might just say on that is that a place like America where they do have very long-term fixed rate mortgages does stand to reason that maybe they do need to hike interest rates more to have the same effect than, say, a Sweden or an Australia or something like that.
Yes. Yeah, and that's exactly what we've seen.
Really peg back discretionary incomes. Yeah. It might take more.
Yeah, because the only rates that are affecting, if you have a fixed 30-year fixed rate on your mortgage, then your mortgage isn't going up. If rates go up, maybe your business loans are going up if you have a business. Your personal loans are going up if you have a car loan. Maybe if you have credit cards that you have money on, they might go up a bit. But yes, it's going to be less of an impact broadly. It is going to be more seen at the business level, businesses having lower revenues than laying people off, which is exactly what we've seen over the last year. And then those layoffs causing a lowering of your income rather than expenses rising from higher debts, if that makes sense. So, interesting.
Yeah, cool. It's an interesting story. Anyway, watch this space. Tell me about the box office, Hamish.
Box office. Movie. Did you see any movies last year? Did you go and see anything?
Oh, I'm sure. Actually, I don't even know if I went to the... I don't know. Surely.
I saw a couple,
I went to see I went to see Top Gun.
Yes. Yeah, this is the list that you can kind of see if you were in any of the top ones, which I'll
I saw Batman. I saw Batman as well. Yeah. But I don't know. I didn't see too many. Anyway.
Yeah, those are the two that I saw. I don't think I went in 2020 or 2021. And part of that was probably because we were mostly in lockdown in Melbourne during those 2 years.
True.
But I went twice this year, which is normally I don't go to the movies that often. So I saw Top Gun and the Batman as well. But it was an interesting year for box office. I always find it interesting to kind of see the overall numbers and which companies did well. Disney's usually always at the top of, they make a lot of movies. They do a lot of blockbuster movies. So, and they make the best ones. So they usually capture quite a large share, and it's interesting to see if any smaller film studios, had a really successful show. So we can take a look at that, and I'll look at the US box office first, and then I'll put it in the context of the global box office as well. But the US box office was pretty soft year. So it came in at $7.5 billion in total domestic ticket receipts. So that's kind of the total box office. And then, of course, the media companies usually have a revenue or box office share deal with the cinemas. So part of that goes to the cinema, like AMC, for example. And then part of it will go to the media company. So $7.5 billion in total. Which was higher than last year, but still down 34% compared to 2019. So nowhere near pre-pandemic levels, which is kind of surprising, given that everything's pretty open now and people have had a lot of money to spend, but people just haven't been spending it at the theaters.
Still hasn't recovered.
No, and to be fair, the number of domestic ticket sales, like say in the US is what I've looked at before, has been declining pretty much every year since 2000. So it's not as if it's a market you would expect to be rising over time, as people kind of tend to go to the theaters less often. But in dollar terms, it has kind of been pretty stable. So 34% is a pretty significant decline. And basically the year was a couple of big hits with a lot of mediocre performers. And I say mediocre, but I just mean relative to the top performers. They still did very well in terms of dollars. But at the top of the list was Top Gun Maverick. which did $719 million at the US box office. That's, of course, made by Paramount Pictures. And Paramount doesn't make a lot of movies. They do a lot of television, the Paramount Company, which was previously Viacom CBS, but they don't do a lot of movies. So it's always kind of surprising to see them, do well on this list. But they had the biggest in the US, and that actually represents 10% of the entire box office in 2022.
Wow. That actually makes me feel so good because, I don't know, maybe I like Star Wars and I like, some superhero movies and whatever, and I like visual effects, but I don't know, I kind of like, because they did all the plane scenes and everything, they shot it. They shot it on camera.
Yeah, no CGI.
Yeah. I actually really like that. The one at the top was the movie that was actually flipping shot with a camera, and all the actors were on this location and they were in the jets and they were shooting the jets. And I just like that. I don't know.
Yeah. Yeah, no, I completely agree with you. It was, it was super. I didn't know that they didn't use CGI for a lot of those shots when I watched it, but then after I found out, and I was just, super impressed by that. So that was number one, 719 million. Second place was quite a bit lower, was Disney's Black Panther movie, which came in at 436 million, so quite a bit off the top there. Next, Disney, Doctor Strange, 411 million. Then Disney's Avatar, so this is the second Avatar movie, did 401 million in the US. It did a lot more internationally, which I'll talk about in a second, but in the US, it was only in fourth place. Then there's Universal's Jurassic World, 377 million. Another Universal Minion movie. Warner Brothers' The Batman came in 370 million. Then another Disney one, Thor. Paramount's Sonic the Hedgehog. And then the last on the list is Warner Brothers' Black Adam. So those were must be top 10 box office hits for the US. So
very cool.
Yeah, so how did the different companies kind of fare? Disney came in at number one with 27% of box office revenue. In 2022, they always seem to have the biggest movies and the largest share. Massive media company doing a lot of movies. Universal, which is owned by Comcast, came in at second with 22%. Paramount actually came in third, despite not producing that many box office movies in 2022. So very impressive. Obviously, a big part of that was Top Gun Maverick. Closely behind that was Warner Brothers, which had 12.5% of the share, and then fifth place was 12%. And those fifth place was Sony at 12%. Those five companies, Sony, Warner Brothers, Paramount, Universal, and Disney, comprise about 80% of the box office. So that's what you get when you have a huge amount of consolidation in the media industry. Yeah. There's just because there's five companies, but the amount of movie studios within that, like Marvel and DC and all of these different movie studios, they're all just kind of in these big lumps of conglomerates.
That is pretty ridiculous. Yep.
Which is kind of
consolidation, barrier to entry, a lot of big players, big fat moats.
Yeah, and all of these movies are massive. These are probably, most of them are in total, $1 billion plus in break even before breaking even. So, these are massive movies that are not open to smaller film studios, and they tend to be these broad, superhero movies that are broadly applicable. Lots of kids, they can get a large kid
I wonder
audience.
How much, because obviously the total cost, they need to recoup is, some percentage actual production cost, and then some percentage, I imagine a high percentage marketing cost. I wonder how that generally breaks down for most movies.
Yeah, well,
I know for video games, they spend more on the marketing than they do for the actual game.
Yeah.
Which is pretty insane.
It's the
I wonder
exact
if it's
same.
the same with movies.
Yeah,
maybe not. Is it? Okay.
It is. Yeah. So typically, I was looking at Disney's recently, and it's about so their production cost is usually about a third of the overall break even, which is crazy because it means that they spend among marketing and another big cost is the fact that they're not getting the total box office. They're splitting box office with the cinema. So between the revenue share with the box office and marketing, it's about 2/3 of the entire break even cost. is those things, and then a third is production, which is crazy. And Avatar was was a little bit worse as well, I think, because their production cost was $250 million, and I think the break even. I think James Cameron came out and said that the $2 billion figure was wrong. It was actually closer to $1 billion. So in that case, it was about 4 times as high as the production costs that they have to break even. But yeah, it's a lot of money that they're spending on marketing. It's kind of crazy, just to But it works. I mean, most of these, well, not all of them, but a lot of them end up doing $1 billion plus at the box office. I can talk about it. I mean, global box office, Avatar 2 actually was number 1 globally. So even though in the US it wasn't number 1, globally it came in at $1.8 billion in global box office revenue. I think it was out for 2 weeks or in 2022. Maybe even less than that. So that's an insane figure. Top Gun came in at second at $1.5 billion. Jurassic World was $1 billion globally, and the total box office globally was $26 billion, which was a 27% increase from 2021, but still far below pre-pandemic 2019 levels. So there you go. Yeah, some of these movies, they do big numbers. It's kind of astounding.
Yeah, it's absolute. They're juggernauts. Yeah, but I don't know. It's kind of a bit depressing at the same time, because the bigger the budget, the more mainstream it has to be, the less room for creative freedom you have. So I kind of don't like it in that way, but hey, it's a business at the end of the day. I'd rather have movies than not have movies, so I guess it just is what it is.
Yeah, I guess a lot of these big movies, yeah, you're right, they're broadly applicable. The stories often aren't that... sometimes they're well written, but they're not. You don't get as many creatively.
They're always focused on worldwide themes like family and stuff like that.
They're paying $50 million for an actor, and that's where a lot of the money is kind of going. And CGI versus storytelling and that sort of thing, which you sometimes get better at smaller productions. But yeah, I don't know. It is what it is. Part of the job, weird. I guess.
It is part of the industry, isn't it? But yeah, very interesting. All right, cool. Should we leave that there?
Yeah. Where do you want to go now?
I'm just going to really quickly whiz through this Binance stuff. I don't follow Binance. I don't follow crypto, but I thought this was just interesting. Binance is planning on doing a hiring spree in 2023. CEO Changpeng Zhao said Wednesday, taking a somewhat contrarian view as crypto firms lay off huge swaths of staff amid continued pressure on coin prices. Zhao said Binance, the world's largest cryptocurrency exchange, said the company increased headcount in 2022 from 3,000 to almost 8,000.
Wow.
In 2023, Binance plans to increase the number of staff by between 15 and 30%, Zhao said at the Crypto Finance Conference in St. Moritz in Switzerland. Is that how you say it? No idea.
No idea.
Rival exchanges have been forced to cut large parts of their workforces after nearly $1.4 trillion was wiped off the crypto market in 2022, and major digital currencies, including Bitcoin and Ether, saw their prices plunge. In November, Kraken announced it was laying off 30% of its staff, and this year, Huobi, never heard of that, and Coinbase said they would cut 20% of their workforces. That was the second round of job cuts for Coinbase in the last year. Zhao said Binance needs to get the company, quote, well organized ahead of the next crypto bull run, and admitted that the exchange is not super efficient. Quote, we will continue to build and hopefully we will ramp up before the next big bull run. So there you go.
Wow. There you go.
I'm waiting for that one.
I wonder if...
I need to recoup my losses. I need that next big bull run.
I hope it's soon.
I'm down 80%, Hamish. What do I do?
I wonder if the back and forth between Binance and FTX, as FTX collapsed, I wonder if that drove people to go towards Binance more. I wonder if they're holding up a lot better than even other exchanges that weren't involved, just out of people being concerned about the instability of smaller exchanges and wanting to go towards maybe an exchange that they trust. Well, it's the biggest exchange, that's the most volume. So I wonder if they're experiencing that. It's an
interesting.
Yeah.
I was just going to say it's an interesting dynamic because Zhao said that they didn't do anything nefarious to try and, because obviously, the more other players fail is better for Binance because everybody comes over. But at the same time, like last year, they said that they were going to save FTX. They said that they were going to make a big investment in FTX. And then just a day or two later, they said, no. And that, like, and then once they said no, it was, FTX was just spent.
Yeah, as soon as they started tweeting about the risks in FTX, as soon as Binance started tweeting about that, that was when all the uncertainty started happening. People started to withdraw, and that's when they got in trouble. So, I mean, whether or not they would admit it, but they basically caused FTX, at least the last bit. They didn't cause the fraud and everything, but they caused it to tip, which is interesting because, of course, it's negative in the short term because people lose confidence in crypto. So naturally they will probably lose volume, but it's also better long term because there's less players. I don't know. It's kind of strange.
Zhao has said, quote, he did not master plan the collapse of FTX. So there you go. But it's very convenient that like all the stuff that he did conveniently helped crush one of their biggest competitors.
But he did plan. He didn't master plan, but he did plan.
Did not master plan, but I did plan. So there you go. Binance hiring, not firing. Thought that was interesting.
Is Binance public?
I don't know.
Are they a public company?
Yeah. I'm pretty sure. Yeah. No? Oh, maybe not.
Don't know.
I don't know. Anyway, that shows how little we care about crypto. We don't even know if Binance is public or not. That's funny. Anyway.
Yeah.
Anyway, that's our washed crypto opinion for this week.
There's been a few washed opinions this episode.
Yep. All right, should we do some Q&A? A couple questions real quick and then get out of here? All right.
Yep.
Oh, by the way, if you guys have a Q&A question, you can ask it to us on Spotify or you can drop us a comment in the comment section on the latest YouTube version of the podcast. So always just go to the latest one, drop it down there, and we will have a look at what you guys are asking and chuck it in our Google Doc.
All right, I'll ask you this one. Hi, Hamish and Brandon. Okay, sure. Random question for you. This is really important. What is the origin story of the beach scene outro on the YouTube version of the podcast?
Oh, yeah.
I don't even know the answer to this. So
no, you don't. I mean, it's really nothing exciting. I wish there was some cool story or something. I went to the coast. I liked to fly drones back then, and I just flew my drone and took some nice footage of the beach. And then I remember when I was editing the podcast, I was just like, I just need a 20-second clip of something because 20 seconds is how long your what's it called? Your card, your end screen card
end screens,
go for. Yeah. So I just chucked that in there and it just has never left. I don't even know if I still put end screens on the video version of the podcast.
No,
to be honest.
We don't even do that. No.
So it's just 20 seconds of just
We need to come
music.
up with a better story. We need a better story than that. We need I went down to the beach and Brandon was like getting attacked by a shark. So I like swam in there, killed the shark.
Yeah.
And then, I don't know.
You dragged me back. That's how we first met.
Yeah.
And then while I was coughing up blood, I said, hey man, do you want to do a podcast? And so it began. Yeah, that's the story we'll run with.
That's a way better story.
Oh dear. Here's an interesting one relevant to today, Hamish. What trust do you place in a CEO and in company messaging? If they say it's all good, does their word mean anything?
Yeah, well, if they, as we said earlier, if
Very
they walk
relevant.
out, if they don't answer questions and they walk out 10 minutes into the conference call, that's probably not a good sign. But I think you have to kind of build the trust with the CEO. You don't automatically trust the CEO, of course, because most CEOs are salesmen or saleswomen and they're just trying to promote the stock. So there has to be some evidence that for a reason why you trust them. And for me, that means I look back, and this is why I like looking at companies with a long history and a CEO who's been in place for a long time. I get to look back over 10, 15, 20 years, and I can see where issues occurred and how they acted in those issues, how they were they honest with the shareholders or were they hiding things and then it came out later and they were like, oopsie. And then also with the goals that they set, do they hit those targets? Do they set a 5-year target and then 5 years passes and then no one mentions the target and they just set a new target? Or do they look back and say, hey, we missed this, but we're going to try and do this, and so on and so forth? So you have to kind of find the evidence of trust. But once I think it's established, which is, it should be a high bar, then I trust what the CEO is saying to me. But that's very few CEOs. It's not, an automatic, I trust what they say, if that makes sense. But it's more of a qualitative process. It's not, there's no hard numbers that you can look at least for me in this respect.
No, I don't think I have anything to add to that, to be honest. I think if you asked, that sounds like a very Mohnish Pabrai answer. Mohnish Pabrai would say that. He would say, you would go back through 10 years of earnings call transcripts or messaging from the company, and he would just see what they were saying 10 years ago and what they actually did and see if it lines up, then they're probably pretty trustworthy. If not, why not? And he'd go from there. That's what he would say. He says that a great case study is 2008, because obviously nobody saw it coming. And even you can say that about the pandemic as well. So nobody saw it coming. So looking at how they responded to a big event that really affected every company across the board, what was their messaging through that? How did they talk to shareholders through an event like that? What sort of outlooks did they give? That can really, really give you some insight into what sort of a player you're dealing with. All right, cool.
All right, I'll ask this one to you. I am American. Curious, you two constantly reference American economics and financial data. Is it because your audience is mostly American, or does the world mostly focus on US data as a benchmark?
I think a bit of both. Definitely the audience is mostly American, for me, on my YouTube channel at least. I think we have a pretty diverse, we still have a very diverse split of listeners on the podcast and viewers on the YouTube channel. But if I look at my YouTube analytics, I think it's 30-something% American, and then everything else is less than 10%. Every other country is less than 10% of that pie.
Yeah.
Yeah. So, that's mainly why I tend to keep the data more focused on the US for my channel. But it's also it's where I like to invest, so I kind of have to keep up with it a little bit.
Yeah.
All the stocks that are, well, not all, but most stocks in my circle of competence just sit in America, so they're going to be affected by whatever's happening in America more so than anywhere else. So try and keep up with that.
Yeah, and on top of that, it definitely is a global benchmark. And that's a lot of the economic data we tend to, at least for me, I like to look at the US for the reasons Brandon just said, but it is because it does act as an anchor and does have, a relatively strong ripple effect across other regions. If they raise interest rates and are showing how they're acting against inflation, a lot of countries will honestly look to follow similar policy measures. They look to the US as a strong economic machine, and how they do things. Other countries tend to follow at least the core concepts, and then have their own variations of it. So focusing on or looking at and understanding what's happening in terms of their inflation and interest rates and those kinds of broad economic factors is interesting to me, and it does have a meaningful impact on the economic data we then see come out in, say, Australia, for example. But same as you, I think I'm mostly US, and then Australian is still a large portion, but quite a bit smaller than the US, and then UK and a bunch of other countries. So yeah, it's pretty broad.
Yep. Cool, nice. All right. Well, that will just about do us for today, guys. Thank you very much for tuning in. As always, wow, we still had no worries hitting our 1 hour kind of I don't know, kind of rough guideline that we put on the, not target. Minimum. I don't want to say target. We don't force ourselves to talk for an hour, but it's interesting that even on a slow news week, which this week definitely was slow, there was still, we still had a great chat, It's interesting. Yeah. We certainly find it easy to talk to each other, which is good if you're going to do a podcast. Anyway, guys, thanks very much for tuning in. We very much appreciate it. One reminder again, if you have any Q&A questions, then drop it in the Spotify questions box or over on the most recent podcast episode over on YouTube. But apart from that, thanks very much for an hour of your time. Hope you enjoyed. Thanks, Hamish. See you next week.
See you guys.